Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 25th, 2025, and we're diving into ACCS Newswire's latest earnings report for the fourth quarter and full year of 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. ACCS Newswire has been making some strategic moves recently, and I'm excited to discuss their financial performance and future outlook.
Revenue and profitability overview. Let's start with the top line. ACCS Newswire reported a revenue of $5.8 million for Q4 2024, marking a 1% increase from the previous year. John, what are the key drivers behind this modest growth?
The growth is primarily attributed to an increase in average revenue per release from their ACCESSwire platform, despite a slight decline in their Newswire distribution platform. Additionally, their adjusted EBITDA saw a significant increase to $871,000, reflecting improved operational efficiencies.
They also reported a positive cash flow from operations of $353,000, a turnaround from the negative cash flow last year. How significant is this improvement?
This is a substantial improvement, indicating that the company is effectively managing its operations and costs. The rebranding to ACCS Newswire, effective January 2025, is part of their strategic initiatives to streamline operations and focus on their core communications business.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 17 cents for ACCS Newswire, but the company reported an adjusted EPS of 21 cents. John, what does this EPS beat signify for the company?
This EPS beat by 0.04 cents is a positive indicator of the company's ability to exceed market expectations. It reflects their successful cost management and operational efficiencies, which have contributed to better-than-expected profitability.
Strategic initiatives and future outlook. ACCS Newswire recently sold its compliance business for $12.5 million and is focusing on its communications business. How does this strategic shift impact their future outlook?
The sale of the compliance business allows ACCS Newswire to concentrate on its core communications operations, which is expected to improve gross and EBITDA margins. Their subscription growth to 1,124 subscribers is also promising, indicating a steady increase in recurring revenue streams.
And what are the company's plans moving forward?
CEO Brian R. Balbirnie mentioned a focus on operational efficiency and subscription growth. They aim to optimize capital allocation and increase market share, which should support their long-term growth strategy.
Risks and challenges. Despite the positive aspects, ACCS Newswire reported a significant impairment loss of $14.15 million, leading to an operating loss of $14.32 million. John, what are the implications of these figures?
The impairment loss is related to the rebranding and a reassessment of the useful life of their trade name. While this has led to a substantial operating loss, it's a one-time charge. The net loss of $10.95 million is concerning, but the company is taking steps to mitigate these challenges through strategic focus and cost management.
Key takeaways. In summary, ACCS Newswire has shown resilience with a slight revenue increase and an EPS beat, despite facing significant impairment losses. Their strategic focus on the communications business and subscription growth is promising for future prospects. Thank you, John, for your insights.
Thank you for having me. ACCS Newswire's strategic initiatives and operational improvements are steps in the right direction.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on ACCS Newswire's performance in the comments below.